Hey everybody, I'm Joe Killinger. I'm a real estate investor and entrepreneur, and we put these videos together every week to give you all the tips and insights from my experience over the last several years. So make sure you tune in and subscribe, and thank you. Hey everybody, thank you for tuning in. Man, do we have a hot one today. Investing in real estate in tax-free states. You're seeing a lot of people shuffling around the country right now, and it's making certain areas of the country that are very hot to invest in, many of them tax-free. So it's a topic that I really want to talk to everybody about today. I think that I can really add some value. Well, actually, George can add some value to you. George is a CEO of Commercial Brokers International in Los Angeles. Thank you for coming in, George.
Thanks for having me over.
He came about 7-8 feet, so traffic probably wasn't too bad in the hall.
Not at all.
But,
I had to fight over the coffee machine, though.
Yeah, probably. That's what you get with an office full of agents. But we invest we're invested currently in Texas, so we have some properties there. So we're pretty well versed in that. Actually, George more so than me. George has done deals in 32 states outside of California.
Right. Yeah.
So he's very well versed in this, can bring you a lot of value. So George, thank you for coming in. I think, it's just a hot topic right now, but it's something that investors have been looking at all along. And so I think let's just jump into, there's a lot to talk about here today. Is advantages, disadvantages, asset classes. We'll get into all of that as fast as we can. And then again, at the end, we'll tell you all the tax-free states. So why don't we just jump in? What are the top 2 advantages, or actually if you have more than that, that are great, top 2 advantages of investing in a tax-free state?
Well, number one, first and foremost, the main reason everyone looks for income tax-free states, and first of all, I want to make sure it's clear, these are income tax-free states, not necessarily tax-free states.
Right.
So,
Lord knows, because the tax rate in Texas is
for
double.
property taxes, absolutely.
For property taxes is double what it is in California.
So the main advantages, though, tend to be you don't have double taxation because you typically are everywhere else within the country. Any investments that you have, you file your taxes in the state that you live in. So you're going to have to file and pay for income tax there, but you will also have to pay for income tax where that property is located if it's not an income tax-free state. So that's one of the main advantages. You don't have double taxations. Absolutely. The next thing is the areas in the states, and a lot of the states, they tend to have appeal to high growth areas. So you have a lot of people moving in generally a lot of times because of the income tax-free states. There's some of the largest states in the United States. What you do have to maintain and be aware of, though, is that's not necessarily because they are large, geographically speaking. It's not necessarily just because you're investing in that state doesn't mean that it's a good investment. You want to make sure
you should be looking at areas that in those states that have good
growth. Absolutely.
Good job growth.
So. Absolutely. So, that, and then I think the other advantage that you run into is that, and this is a little bit of more subtle in that income tax-free states tend to always be popular, and first places investors from out of state tend to look. So you have perhaps at times a greater pool of investors if you go to sell.
Right. All right, disadvantages.
Disadvantages. Well,
there's a few.
There are definitely a few. First and foremost, you had touched on one a little bit. Depending on the asset class, when you start talking about the disadvantages, you have these states are all, as I mentioned, income tax-free states. So government has to make money somehow.
Right.
And they typically make up the money in these areas by having higher tax rates for property taxes, use taxes such as utilities or gas, or sales tax. So that can
property tax,
can adversely impact you depending on the type of investment that you're getting and looking at.
Well, another disadvantage, I was talking to a broker in Austin earlier in the week, Austin, Texas, and I guess you probably knew that, but some of the prices there for office leasing is not that far off of California anymore.
Not just Austin, Dallas as well. Some of it's crazy. I know some of the downtown Dallas area. They were going for and I'll quote it in a yearly rate because that tends to be more about
Where they do
the
it?
more about the rest of the U.S. Versus California.
Yeah, California does it monthly.
But with triple nets, they're up to $60 a square foot in some of the Class A office high rise, which is equates to $5 a square foot a month, which is a really high rental rate for office space.
Yeah, that's pretty nuts. Since you've done investing in all these other states, I mean, you're just kind of plotting the map? You're going to fill in the United States?
It's I think it'd
Probably.
be fun to do that. Okay.
If you get North Dakota,
Sideline, I
South
do.
Dakota,
Yeah,
Nebraska.
the upper states, are a little bit harder because they're more farmland.
Right.
So now that being said, they shouldn't be overlooked because
So there's some good deals there, especially triple net.
absolutely. What I've always said is that for us, geographically agnostic, but I'm very much location driven.
Yeah.
So you can almost always find a good property or good real estate to invest in any state.
Well, that's actually a good segue because I'd like to touch on if I'm going to be investing in a tax-free state, out of my own state. What's your number one asset class?
Number one asset class is for ease of management and also mitigation of liability and perhaps some of the other issues is single tenant net lease.
Okay. That makes sense.
In a single tenant net lease or ground lease, two different things, but either one of those, the tenant is paying for everything, including the property taxes. So even if you're in an income tax-free state that may have a higher tax rate, you're mitigating your risks associated with that valuation of the property by having the tenant pay for it.
Right.
Same goes for the expenses when it comes to the utilities. So even if it's a high utility rate or because of, again, use taxes, the tenant pays for that. So I really do like those asset classes. The next would probably be just straight triple net, like a retail type asset. Same reasons behind that. And one that I really like right now is, and everyone's been talking about it, is industrial, but specifically last mile.
It's just hard to find, though.
Hard to find. There aren't as many that come up on occasion. We're starting to see more and more.
Probably,
And, we're looking for companies that are really, DHL, UPS, FedEx, Amazon. Even Walmart, Lowe's, they have huge distribution centers in a lot of the areas and metros, but the thing is they want the last mile, so smaller warehouses that they can stock enough product to deliver, or enough of the popular products to deliver those to the end consumer within a day.
Right. Yep.
So,
what's your next asset class you like?
multifamily, and here's why. We talked a little bit about some of the advantages, one of it being the fact that it is tends to be more popular when it comes to people moving in. They tend to have good job growth. They tend to have other states. There's been a big influx of people from New York moving to Florida, California going out to Texas, as well as other parts of the country. A client of mine just moved to Tennessee literally last week.
Yeah.
So there is definitely a influx and moving and shift when it comes to that. So you want to be aware of that. And from there, then you want to then really understand those areas that they are moving into.
Yeah. Here's the thing, though, you guys, is as you're taking a look at the asset class you want to invest in, you've got to really treat this as a business. So you need to start looking for a good broker right away, especially if you're going to do a 1031 exchange. You need to make sure that you know every area that you want to invest in and why you want to be there. You want to look at do your due diligence heavy duty. Make sure you know the concessions that are currently in place, if there are any, vacancy rates, how many properties are available, what does the job growth look like? Really do your due diligence, and a good broker can help you do that. So that's really important. Now, another one is property management, and we've seen this. We've bought property around in a few other states, and a good amount of time that we've bought them, they were completely mismanaged. And I'll give you an example. One of the last, actually the property we are going to talk about is in escrow right now in Dallas, but it is, the property management that was running this property prior to us buying it, was booking $60,000 a year for a payroll for their on-site managers. That, in all actuality, they were paying her 30 and pocketing 30. So they had a maintenance guy in a 3-bedroom unit that he was getting for free. Maintenance they were billing this landlord that they weren't actually doing. They were buying maintenance items, drywall, all kinds of good stuff that they were buying for that property and they're using on their own property. So you've got to go back and check on it. You've got to be boots on the ground. It's very key if you're going to buy out of area that you are boots on the ground, you have a good team around you. Otherwise, it can go south on you very, very quick. You know, the best way you want to start with is getting that broker. Get the broker involved, get references for brokers and vendors from everybody. And your broker could probably give you good references for property management too. So, is there anything else we can touch on to give them some value?
Well, good question. Actually, what I'd like to do, the one thing I think that people need to really take home from this as well is, even though we're talking about income tax-free states, that doesn't mean that the
necessarily the best deal.
41 other states that are out there are bad investment areas, because you know that's not the case. The bottom line is that, you know, when you look at this, the best advice I think you gave was that look at it as a business, look at it as the investment, check the demographics from 5 years ago to current to expected growth, not just the population, but also income levels and whatnot. But then also then take a look at the property. What's driving traffic to that area? Do people want, if it's a multifamily property, will people want to live there? Is it walkable? You know, the walkability of it, the transit scores, all of that. Take all of that into account. Take a look at it and try and find one that's the right property. And keep in mind that, you know, there may your return, if it's 5 or 10% higher in a state that has income tax, and that income tax is only 3%, it's probably a better investment. So you want to really take a look at all of that, you know,
well,
like
also a good CPA.
Comparable.
You know, you want to sit down with your CPA before you start investing anyway, and really put a plan together, your investment strategy. So a good CPA. So CPA, broker, property management company. You want to make sure you've got a great team put together, and that's going to help you a lot. But all right, why don't you give us the states that are currently income tax free? Okay,
there are 7 official states, plus 2 sideline states I'm going to touch on. Okay, so you have Alaska, Florida, Nevada, South Dakota, Texas, Washington, Wyoming. I did that in alphabetical order, as opposed to geographic. But across the board, those are the 7 states that are income tax free. In addition to that, there are 2 other states, and they do tax investment income, but primarily only dividends and interest. Okay. So they can also be very valuable when it comes to the real estate investment side, and that's Tennessee and New Hampshire.
Okay. All right, that was some great info. Thank you very much, George. And again, CPA. Start with your CPA before you start talking to a broker. All right, so thank you for tuning in. If you want to talk to George, I'm going to put his contact information at the end of the video. Reach out to me anytime. You can find me on Instagram at Joe Killinger, at JoeKillinger, or find us on YouTube as well. So that's where this video is going to be. And while you're there, don't forget to subscribe. And at the end of this video, please give us a like. Thank you.